And now let's start with how the markets are faring. Asian markets, they have surged to a record high after signs of progress towards possible peace deal in the Gulf that boosted investor confidence globally. Japan's Nikkei, that has crossed 62,000 mark for the first time after returning from a long holiday, while South Korean and Taiwanese stocks have also scaled all-time highs. Asia Pacific Index outside Japan rose another percent and is now up 7% for the week. Investors also shifted back into risk assets as oil prices cooled sharply after Wednesday's steep sell-off. Oil markets, however, remain highly volatile, despite the recent pullback. Brent crude traded just above $102 a barrel after plunging nearly 8% in the previous session. But prices are still roughly about 40% higher than levels seen before the conflict, and that is keeping pressure on inflation as well as global growth. The biggest uncertainty remains on the Strait of Hormuz, which is a critical global oil shipping route that Iran has yet to fully reopen. Analysts warn that even if a deal is reached, damaged infrastructure and precautionary stockpiling could keep energy prices elevated for months. Rising oil costs have already pushed U.S. Treasury yields higher and reignited concerns over supply chain disruptions and persistent inflation. Currency markets are also remaining in the focus as U.S. dollar weakened and investors monitored sharp movements in the Japanese yen. The yen briefly surged to a 10-week high, fueling speculation that Japanese authorities may have intervened to support the currency after months of weakness. Meanwhile, the euro and British pound extended gains against the dollar as global risk sentiment improved. On Wall Street, the S&P 500 and Nasdaq closed at record highs overnight, supported by strong corporate earnings. Investors are now closely watching Friday's U.S. non-farm payrolls report for further clues on the health of the American economy and the Federal Reserve's next moves as well.